While the Chinese economy continues to gather momentum and continue along its growth path, many investors in resources have questioned whether the country's vociferous appetite for things like iron ore will continue. Recently, economists at a couple of investment banks have downgraded their long-run expectations for the price of commodities. This has left a couple of the major mining companies looking vulnerable. Joining us in studio to discuss the implications is Stephen Menchie's from Imara SPRE. Thanks so much for your time.
You're welcome.
So an iron ore price crash imminent, Stephen?
Well, I think let's look at it in the context of having crashed last year down to around about 80 or so, below 90 anyway, and then soared up to around about 160. So, and there was a kind of a destocking and a restocking situation. And a few weeks ago, Marius Kloppers said he expects, like everybody else, that the price will ease off into the second half. I think since then, sentiment has deteriorated, and you've got these houses coming out giving quite aggressively negative forecasts down to well, the $100 level, which is quite, and in fact I think I saw $80 as well once again. But there's is
there a floor at that $80 level, just before we continue?
Well, it might be one higher up, because a lot of Chinese producers are said to be uneconomic at below $120, and much more so at 100. Rio Tinto was saying that the Chinese, needed at least $100. So you'd only get the price crashing below that for a short while, as was the case last year. So I think maybe below $100 is a bit aggressive, but I think it's quite, our long-range price in our models is $110.
Stephen, I think what shocked the market this time will raise a few eyebrows at the very least was the fact that it was one of Rio Tinto's senior economists that actually talked about this long-term price. And the other side of the coin was the steel producers in China. Obviously, some may argue that what China have gone through over the last 20 years is a once-off event. They've effectively built infrastructure for their entire country in the space of 20 years. Where does that leave your thinking around some of the companies that supply iron ore, and obviously the biggest one locally is Kumba?
Look, I think there's a strong supply response, which that economist at Rio is talking about. But there are two different issues here. On getting back to urbanization in China, I think they're only about halfway through. They've literally got hundreds, if not thousands, of cities to build in the hinterland. So there's plenty more infrastructure to go. I know the chairman of Bayer Steel was saying things are going to slow down a little bit. But who knows whether he was perhaps talking to his book. I mean, he'd like to see the iron ore price down in the short term. And Rio Tinto, of course, has got this huge problem of Simandou, which is a massive deposit in Guinea, which they have rights to part of. And the last thing they want to be told is they've got to start producing now.
With all this news flow and the uncertainty, what would your advice be to investors in and around Kumba iron ore?
Well, as far as Kumba is concerned, I think the sentiment has turned negative. Yes, the price will go down, but bear in mind they're ramping up production. That's not really going to change. So perhaps a little bit kind of a hold, maybe fully priced. And if you really want iron ore, Exxaro, you're getting your Kumba, plus you're getting that ramping up when a Medupi eventually cranks into action, you're going to get the coal production. Another 14 million tons of coal coming through. So Exxaro is probably a safer play.
Stephen, the Exxaro issue is obviously one that's very topical at the moment with the strikes, obviously following on from what we saw in the platinum sector last year. How do investors cope with something that could be a very short-term phenomenon if Labour and the business can come to agreements around salaries and wages and living conditions? Are you treating this strike as a sort of once-off that will heal pretty quickly, or is it indicative of deeper problems within society here?
I think there's a fundamental difference between this and the situation at Rustenburg Marikana last year. I think the mines where the trouble is at Exxaro are much longer established, and I think it's a very specific issue. So there is a big difference. I don't think you have the socio-economic issues, in other words. Attitude, yes. There does seem to be a kind of attitudinal problem. A lot of these issues one would have thought could be resolved without strikes.
How are the smaller players in the mining environment faring, in your opinion, at the moment? You obviously need to look at each stock on an individual basis, and you can't paint them all with one brush. Are there any opportunities in your eyes?
Well, you take two juniors in the coal or anthracite field. I mean, you've got Coal of Africa, which has got a magnificent deposit at Mikado and beginning to operate at Vele on the Limpopo River. And it has got some oil mines in Limpopo, which are really a millstone around its neck, losing money, and there have been derailments on the railway line to Maputo. And they had a negative cash-wise quarter to December, so they do have problems. You take as against that, but of course they do have a very strong partner in the Chinese, so those problems can be resolved. But if you take a stock like Petman, also a junior, but a very, very robust producing profitable mine in KZN, anthracite mine, with doubling production this year and production all virtually sold in advance. And they've got a magnificent project in Canada, or in Labrador, so which will take a lot of money to fund. But the difference is they're fully cash positive, they're generating cash, and they're not at the mercy of any banker in the meantime.
Stephen, it's an interesting debate as to when you invest in some of these companies. Obviously, coal just getting going with Vele. They've got Mikado as the blue sky. Similar type of story with Petman with the Zomkele mine, and then obviously that Canadian Iron Sands project. Do you wait until they're actually into production, or how do you value a future project that is still about 4 or 5 years in both companies' cases away from delivering actual production?
Well, until they do their feasibility studies and so on, you can't really model it, but you can value the Zomkele operation, and then you can see what price the market's placing on the Labrador project, and I think you'll see that it's in for very little. So right now it does look quite attractive from that point of view.
So just to get this on the record, I think, Bronwyn, would you be buying both Petman and Coal of Africa at this point?
We'd be buying Petman. I think we'd wait on Coal of Africa.
I just wanted to get your opinion on, and I know we probably didn't discuss this off air, but I think I wanted to get your opinion and suck you into this debate around what's going on at Minas Rios with Anglo American. That's obviously a massive iron ore deposit in Brazil. It's been bogged down with regulatory challenges, and we've seen the price of the project, I think, almost double since they started there. Is the project actually worth holding on to on its own at this point for Anglo American, or does Mark Kudufani really need to get a partner involved there?
Or does he need to walk away? Does he need to walk away?
Oh, yeah.
Well, he'll certainly be letting us know in about 3 to 6 months, I guess. My gut feel would be no, that they've sweated and taken all the pain. I mean, they really have taken big pain. They might as well slog through it. Unless there are any more legal, logistic barriers that we don't know about. But it seems as though they're pretty well on track. They've crashed through scores, hundreds of regulatory barriers.